Hello students, welcome to my lesson today. It's about documents used in home trade at the invoice stage, which is the third stage. Remember the second stage last time we looked was called the delivery stage. So the third stage is invoice stage. Meaning that at the invoice stage, it is where most documents are sent by the seller to the buyer. And at this invoice stage, it is where the buyer is supposed to pay the seller. Therefore, the seller has to send the following documents: invoice notes, credit notes, debit notes, and statement of account. Of course, once this has been done, the seller can issue what you call a receipt, or what you call sometimes I owe you note. But it's very important to look the types of invoices we have in business. In business, we have two types of invoice. We have cash invoice, and we have what you call credit invoice. What is a cash invoice? A cash invoice is where payment is made immediately after the delivery of the item. Meaning that once the buyer receives the item, he has to make what you call payment, and then the cash sale receipt must be issued. So you are given a receipt once you make payments, and that's what you call cash invoice transaction. The buyer pay for the goods at the spot, and then is issued what you call a cash sale receipt. And a credit invoice transaction is where the buyer takes the goods and make payment later. So as a buyer, you take the goods, you make payment later. That's what you call credit invoice transaction. And therefore, let us look some of these documents that are used at invoice stage. One is what you call invoice note. An invoice note is a document that's sent by the seller to the buyer to demand payment. So invoice demands payment. Demands payment. It demands payment from who? From the buyer. It's sent by the seller to the buyer to demand what? Payment. So who is demanding payment in this case? It's the seller who is demanding payment from the buyer for the goods that he had delivered. And therefore, what are some of the format? How does the invoice note look like? How does the invoice note look like? It looks like this. It must have what you call here code. It has quantity. And it has description. And it has what you call unit price. So it looks like that. Yeah, it has some columns. Yeah. At the code is where we enter, for example, 001. What was the quantity? You give the numbers. For example, say 10 books. Of which subject? You say inventor form 1, inventor form 1, business studies. Then what was the cost of one book? You say it was maybe 400, and then the total will be equal to 4,000. We have also maybe 20 books, form 1, KLP, maths, and each was what? 5,000 each, which was 500 rather. So the total will be 20 times 500, you get what is called 10, you get what you call what? That is equivalent to 10,000. 10,000. So the total will be indicated as you have 4,000 and you have 10,000. So the total will be equal to 14,000. And then we have also another word called here E and OE, meaning that error and omission exempted. And then we have also to call 10% quantity discounts. Meaning that the seller might give what we call a quantity discount to the buyer. Error and omission means that what is the meaning of error and omission exempted? It means it's only the seller who has what? The right to correct an error in the invoice. So as seller might make an error, maybe an arithmetic error, adding figures, amounts. He made instead of writing 30,000, he wrote 10,000 or 3,000. So that's an error. So he has the right. That's why it's indicated down here. E and OE, error and omission exempted. We want to look at the purpose of the the purpose of what you call what? The purpose of invoice note. What's the purpose of invoice note? The purpose of invoice note, one, it is used to show details of goods. It shows what you call details of goods. For example, details of goods here called 10 books inventor for one business, 20 books KLB mathematics, and we have the terms of sale, what you call here, error and omission exempted. We also have 10% quantity discount as my terms of sale. Also, number two, it is used to demand payment from the buyer. So it's used to demand payment from the buyer. Yeah, demands payment. Invoice demands payment. And number three, it is used as a source document when recording in the books of what? In the books of account. The books of accounts are the example balance sheets, trial balance, ledgers. So we have sales ledger and even purchases ledgers. And we have also another, it also shows the amount of discount that was given. It shows the amount of discount that was given to the buyer. I want to look at the second document, which is called a credit note. What is a credit note? A credit note. A credit note is a document that is sent by who? By the seller to the buyer. It's sent by the seller to the buyer. Credit note. Sent by the seller to the buyer to correct an overcharge. To correct an overcharge. Meaning that for me, I use what we call CO. CO means a credit note is used to correct an overcharge. Meaning that the seller had overcharged the buyer. Instead of you paying 40,000, but it happened, there was an error, you paid what you call 45,000. So there's an error of how much? 5,000. So as a buyer, you are supposed to be given back what you call 5,000 because you were overcharged. So that was the purpose of a credit note. And what are some of the reasons for a credit note or circumstances when a credit note may be issued? It is issued, for example, when goods are returned by the seller, by the buyer rather, and the seller cannot replace. So you find the buyer has returned some goods, but unfortunately the seller cannot replace. So what happens? If there is no other replacement of that book, then the seller you should give the buyer somewhat the amount of money, or you are supposed to reduce the amount of money. Number two, it is sent when used to correct what you call overcharge due to arithmetic error. So the buyer was overcharged. So it is sent to the buyer to correct what you call overcharge in the invoice. And number three, it is sent when there was an inclusion of items that the buyer had not ordered. You find that this credit note had some items that the buyer had not ordered. So it is used to where the seller had included some items where the buyer had not ordered. So if the buyer has not ordered those goods, therefore those goods have to be returned, and then the buyer has to be given what you call the amount. Then we have another document which is called a debit note. What's a debit note? A debit note, it is a document. Debit note. A debit note is a document that is sent by the seller to the buyer to correct undercharge. To correct undercharge. Very important to note. A debit note correct what we call undercharge, meaning that the buyer had paid less instead of paying what was supposed to be exactly. Maybe, for example, you were supposed to pay 40,000, but you paid how much? 38,000. So how much is less you are supposed to pay here? 2,000. So it's used to correct undercharge in the invoice. So it acts as additional invoice. And what are some of the reasons for a debit note? It is due to mistakes. One, due to mistakes of arithmetic error. People make error in arithmetic. So it might have the seller made what? An error. Instead of you paying 40,000, the seller has you to pay 38,000. That's what you call arithmetic error, mistakes. Number 2 is due to price undercharges on some items. So you find some items were undercharged. Instead of one item to be sold, maybe for example, 5,000, 500, you are undercharged to pay 400 instead of 500. Undercharging of some items. And number 3, omission of some items in the invoice. So the seller did not include some items in the invoice. So he omitted some items. Maybe he made an error. Yeah, he made an error. He did not include some items in the invoice. So he omitted them. Unfortunately, this was unfortunate. He forgot to include some items in the invoice when calculating the amount that the buyer was supposed to pay. And then failure of the buyer to return some empty boxes. You took crates of soda, you don't return those crates of soda and the bottles of soda. So if you fail to return, the seller has to write what we call a debit note, meaning that he has to increase you the amount to correct overcharge. You pay more, you pay for the value of the crates and the value of the bottle of soda. That's why I've said a debit note is used to correct undercharge. So as a buyer, you are supposed to pay what was supposed to be paid. Maybe you not return empty containers, or you undercharged some items. There was there was arithmetic error in additions and all that. And then we have what we call statement of account. Statement of account. This statement of this is a document that is sent by who? It's sent by the seller to the buyer to show a summary of all transactions over a given period of time, usually 1 month. Yeah, usually 1 month. That's what we call statement of accounts. Usually a period of 1 month. Statement of accounts. What does it have? It has the following. What's the content of the statement of what? Statement of accounts. The content. 1, it has what we call name and addresses of both the seller and the buyer. Name of both the seller and the buyer. Those are what we call addresses. It must have addresses. Number 2, it has the buyer's account number. It has the buyer account number. So the buyer account number, you pay your account number. For example, once you receive the statement of account, your account number must be given there. So the seller has to send you that statement of account having the buyer's account number. And also we have the dates column, the date of column. So we have the date here. It indicates 01/01/2025 is the date column. Also it has what we call particulars. Particulars also means details. What happened this one? 2 goods, maybe books, worthy this amount. And then it has amount maybe 4,000. So it has details, it has date, it has date details, amount columns to indicate that. And of course, it must have the signature. It must have the signature and number of invoices sent, number of debit sent, number of credit note issued, and it must have the what you call invoice, number of invoices sent, and also the receipt number that was issued. And therefore, and even if it must also have what you call outstanding balances, the amount that's remaining, the amount the buyer has paid, and the amount that has been maybe carrying forward, the amount the buyer did not pay. Then we have also to look what you call a receipt. A receipt, what is a receipt? A receipt is issued. A receipt is issued when the buyer has made payment. A receipt is issued when the buyer has made what? Payment. So when you make payment, you are given, as a buyer, you are supposed to be given a receipt by the seller, which marks the final business what? Transaction. But in other case, it's very important to note that the buyer might not have money. The buyer might not have money to pay who? To pay for the seller, for the goods that he took from the seller. So as the buyer, what do? Do you hide? Do you hide Tessera? You should write what you call I owe you notes. I owe you notes. I owe you what? I owe you note. What's an I owe you note, class? An owe you note, it is a document that is written by the buyer to the seller, acknowledging that the debt exists. Acknowledging that there is a debt exists. So as the buyer, you tell the seller, I have your debt, but I will clear it. So you write what you call I owe you note. You stop hiding the seller. Write it to the seller, I owe you note. That meaning that I have your money, your debt, amount due, but I will pay as soon as I get it. So unfortunately, an I owe you note does not have what called a date when payment will be made. It does not what? The date when payment will be made. Yeah. So you find that you don't specify when are you going to pay the seller the amount that you are owing him. This marks the end of business documents at this stage of invoice, and I want to welcome you next time to another topic. Thank you for listening to me. I am Benson Murwani. Thank you.